Welcome back to Alpha Recap, everyone. Adam here. Today we're unpacking a post-market wrap where the tape closed a bit risk-on, led by tech, but honestly with a cautious tone. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Thanks for having me.
So, what really stands out here is that even though markets closed higher, it didn't feel like a runaway rally. Can you set the scene for listeners?
Absolutely. The major ETFs finished up, but modestly. The broad market ETF closed up about 0.5%. The big tech-heavy ETF gained roughly 0.6%, and the small cap ETF rose just under 0.5%. So gains across the board, but measured and selective.
Right. So modest gains, tech-led, small caps participated. I'll say it felt like rotation rather than everyone piling into the same stocks.
Exactly. The day had a rotation flavor. Buyers favored information technology in certain industrials and materials names, while other groups, some utilities and cannabis names, diverged. That kind of dispersion is typical when participants are waiting on macro data or company updates.
I mean, when you step back and look at this, what does that say about risk appetite?
It says investors were willing to take on risk, but selectively. Momentum favored growth and AI-adjacent narratives. That's the tech leadership. And yet small caps moved too, which tells you that risk-taking wasn't only concentrated in mega-cap names.
Right. And the other thing is, this wasn't broad-based breadth to the upside. Traders talked about buying dips into names with clear secular stories or supply-driven narratives rather than one-day speculative flows across the market.
Let's dig into sectors. Tech and communications were leaders. What was driving that in plain English?
Simple explanation. Investors are still pricing in stronger long-term demand for AI infrastructure and software licensing models. That lifted names tied to optical components and data center suppliers, groups that benefit when companies spend on more compute capacity.
So funding more data centers and AI compute equals more demand for certain suppliers. Got it. Materials and mining also popped?
Yes, supply security narratives, where companies focused on reliable sources of raw materials or defensive supply chains, attracted flows. Geopolitics and industrial demand kept that theme alive, so some materials names outperformed on that basis.
And industrials. The automation and supplier names looked okay too, right?
They did. Select industrials saw strength on expectations of steady order books and modernization efforts. In short, companies tied to factory upgrades or automation were of interest.
Yeah, that tracks.
Utilities were split. Nuclear-related plays drew interest due to reliability and infrastructure narratives, while parts of the solar and distributed generation complex lagged as investors questioned near-term fundamentals and regulatory risk.
Cannabis remains a mixed bag, I take it.
Correct. Rotation into names with credible paths to profitability happened, but companies still facing regulatory hurdles or capital constraints struggled. So the sector continued to show dispersion.
Short reaction. Let's talk specific movers. A couple of companies had headlines today. What stood out?
Copart slid after a decline in insurance volume, which hit confidence in parts of the industrials and auction complex. Walmart threw a bit of a warning bell for retail, with comments that raised questions about promotional intensity and margin pressure. And we saw a batch of 8K filings from companies like Oracle, Aptiv, and some smaller firms. The volume of filings added to a cautious tone in the names affected.
Hold on, say that again? The filings matter even if they're routine?
They can. An 8K alone doesn't mean something dramatic, but a cluster of filings or the nature of disclosures can prompt investors to step back until they pass the details. So the frequency and context mattered for sentiment today.
Short reaction.
Right.
Crypto-related equities were mixed too. Quick take?
Crypto stocks showed dispersion because the underlying crypto market was mixed. Security headlines lifted some names, adoption narratives lifted others, and that created a patchwork on the equity side.
Let's unpack the macro backdrop. The recap emphasized that markets were positioning around uncertainty. What does that mean for Fed expectations?
Analysts noted that traders continued to price a data-dependent Federal Reserve.
The market reaction suggested participants weren't expecting an aggressive policy pivot. Instead, if inflation measures like CPI or PCE and employment figures continue to show gradual improvement, the bias remained toward growth and cyclical exposure. But any surprise in those prints could reprice risk quickly.
So the market was higher, but ready to reevaluate when the data comes in.
Exactly. It was measured risk on with an eye on upcoming economic releases and Fed speakers. Positioning reflected comfort with the current policy outlook, provided the data didn't materially change.
Can you explain breadth and why technicians were hesitant to call a breakout?
Sure. Breadth measures how many stocks participate in a move. Technicians look for both breadth and volume to confirm a genuine trend shift. Today, indices closed higher, but without broad participation or strong volume, which looked like consolidation rather than a decisive breakout. So technicians will want to see gains spread beyond the tech cohort and stronger volume before calling a sustainable trend change.
So traders are watching for follow-through tomorrow and next session.
Yes, follow-through in breadth and volume is the confirmatory signal. If gains broaden to materials, industrials, and small caps with credible volume, that's a cleaner risk on. If gains concentrate back in a handful of large cap growth names, then caution likely remains.
Looking ahead, what are the things to watch that could move markets in the next session?
The near-term list is straightforward. Incoming inflation and labor market data, Fed speaker commentary, and continued corporate updates and 8Ks. Sector-specific narratives, whether materials and industrials confirm supply security demand, or whether AI infrastructure names show CapEx confirmation, will matter too. And of course, technicians will be watching breadth and volume for validation.
Honestly, I was a bit surprised by this one.
Which part surprised you?
That small caps actually held up pretty well alongside tech. I expected them to lag today.
Yeah, it's notable. It supports the narrative of selective risk-taking, not just mega cap concentration. But again, it was measured, not manic.
Quick reactions. 2 observations.
Go for it.
1. Selective optimism. 2. Data will change the tone quickly.
Agreed on both counts.
All right, let's wrap with clear takeaways for listeners.
First takeaway. Markets closed up modestly with tech leadership, but the move was selective rather than broad. Second, rotation into materials, select industrials, and AI-related infrastructure names suggest investors are buying themes tied to structural demand or supply security. Third, the Fed remains the primary macro crosswind. The market was positioned for data dependence, so upcoming inflation and employment prints could tilt sentiment quickly. Fourth, technicians want to see stronger breadth and volume for a conviction move.
Great summary. Important reminder. This discussion is informational only. Analysts note trends and market dynamics, not personalized investment advice.
Correct. This is market color and analysis, not a buy or sell recommendation.
Thanks, James. That's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time.